Thanks for joining us. I'm Marlon Bowling with you as we take another look at our ag commodity markets, which, to be real honest with you, are quite jumpy today. Pretty active markets in the ag trade. Now, USDA actually had a little bit of optimistic news this morning before we opened up. They said, hey, we had some overnight export sales to talk about this time. Let's see what they were. This time around, it was a batch of corn that was sold to Mexico. What was the amount? The amount was 114,300 tons. So we thank them for that business. Haven't seen Mexico in that mix on the overnight sales here for a little while. So just wanted to mention that before we get into our current prices. And of course, we had our planting progress numbers from USDA yesterday. They came out with corn at 8% planted nationwide. We had soybeans coming in at 3%. That is just slightly ahead of the average of 2%. And it looks like we had cotton planting at 11% done. That's 2 points ahead of schedule. Grain sorghum, 15%. And that's a little behind the 19% average. And spring wheat, 19% planted. And that's 7 points ahead of where it normally would be at this time of year. Well, we had a big run up in the markets after we opened up today. Let's take a look at where we now stand with our quotes provided by bar chart. We have the July corn now 12 higher, make it 11 3/4 higher now at 5.92 1/4, about a nickel off our earlier high this morning. December now 8.5 higher at 5.28 3/4. Soybeans had quite a run. For a while, they were over 30 cents higher. They have eased back a little bit. July now 24 3/4 higher at 14.61 1/4. And November up 18.5 at 13.02 1/4, make it 18 1/4 higher now. And then in the wheat, here in the wheat market, it was pretty quiet overnight actually. And then after the opening bell, they took off and ran. July Chicago wheat 16 3/4 higher at 6.70 1/2, but that's 9 cents off its earlier high from about an hour or two ago. We have July KC wheat 17.5 higher, and we're at 6.36 1/4. That would put us 21 cents off our earlier low, but still roughly about 6 cents off of our earlier high. In the spring wheat market, we currently have July now 12.5 higher at 6.84 per bushel. The cotton market has been surging ahead too, but it's easing back a lot off its earlier high. We have July now 45 points higher at 85.16 per pound. Well, let's bring in Brian Hoops of Midwest Market Solutions in Springfield, Missouri. Did you get any snow this morning, Brian?
Hey, not yet, Marlon. They're talking about maybe noon or so. We're going to get a little bit of snow. It's not going to last as we're going to be 80s by the weekend. And a lot of places across the Midwest are going to be seeing that same type of temperature. Warm by the weekend, planters are going to be rolling. But right now, markets are focused on the drought in Brazil. There's been some reports this morning that the yields are dropping in the second corn crop in Brazil, down 5 million tons. A private estimate has lowered their estimate by 5 million tons from previous numbers. And that has really caught the trade attention because that opens the door for more U.S. export business. We saw a sale, as you mentioned, to Mexico this morning. That could be the start of quite a few sales. If Brazil is going to have a smaller crop, a lot of business will come back to the United States. So really strong technicals this morning. That's fueling some buying interest. Plus, we talked about the dryness in Brazil. That's also a very much a contributing factor. And it, despite maybe some snow moving through some of the plains this week, it's still dry across a lot of the upper Midwest. Producers telling me they're going to plant in some dry dirt and hope it rains soon.
I did see some comments yesterday where a similar dry spell in Brazil had caused, it was in the neighborhood of a 30% reduction in the safrinha corn crop production several years back. And so they were using that as a benchmark, not a prediction, but just something to compare against. And that kind of caught the market's attention, too. So anyway, Brian, right now we have new contract highs in old and new crop corn, old and new crop soybeans. We have new highs in Chicago wheat, Minneapolis wheat, not in Kansas City. It has a ways to go yet, but just wanted to point all that out. Now, we'll come back and take a look at our livestock trade here on a Tuesday with Brian Hoops when we come back. Let's talk livestock with Brian Hoops right now. Brian, any word on what the cash cattle market might do this week?
Well, we haven't seen any bids. Asking prices are probably going to be a little bit higher than last week, but the general focus or tone of the market, we're going to be down this week, probably steady to $1 lower, and we may trade some cash real late in the week. Cattle and feed reports on Friday afternoon, and it doesn't appear that anyone's too interested in moving cattle while there's a snow moving through Kansas, Oklahoma feeding regions. Middle of this week could be pretty messy, sloppy until later in the week when things warm up.
How are the big commodity funds positioned on livestock right now?
They're holding some really big long positions in cattle and hogs. They probably trimmed a few of those positions here in the last week, with the cattle being down 8 consecutive days, and maybe today looking like number 9. So no doubt the funds are doing some selling, but they're still holding big longs in that market, and probably will not give them up, anticipating that we're going to see higher prices going into the second, third, and fourth quarters of this year.
Let's look at live cattle prices right now. And with our quotes provided by bar chart here, we currently have turned mixed. We have June live cattle now down just 1 tick, 2.5 cents lower at 118.57 per hundredweight. And we have August now a nickel higher at 118.70. The deferred's 20 to 40 higher in October and December. So it is coming back. On the feeder cattle market, they're also coming back quite a bit. We had the May getting as low as 139.90, but now we're at 141.45. Well, how's that for a turnaround? That would be about $1.50, a little over that, off of our earlier low this morning, and now we are down just $1.07. We had some sharp losses earlier today. And the August contract is only down a nickel right now at 152.72. And on the lean hogs, you currently have the nearby May contract up $1.80. You have June gaining $1.70 today. We're at 106.02, got as high as 106.40. So the lean hog market pretty strong across the board with triple-digit gains. Do you see more of that this week now?
Yeah, I think so. Especially with farmers heading to the fields later this week, we'll see some strength in these cash markets as well. It was kind of just a 2-day sell-off Thursday, Friday of last week because of poor export numbers that we saw on Thursday. We're kind of moved past that now, and now focus back on this market trying to move higher. Technical recovery is underway, and looking at the cash markets, which I think, as I said, will still be higher going into early part of next week.
Thanks for the info, Brian. Always good to hear from you. Brian Hoops of Midwest Market Solutions with us here this morning. Janet, I'll turn it back to you.